Hi, I'm Jim Gaffney, and I'm sure you've heard. Interest rates are low. They're really low. Actually, they're not that far from some of the lowest price points in history. So, the question of should I refinance or not comes up, and it's important. And if it's managed well, the outcome can be a huge benefit. But it can also be the wrong path that's only going to provide for minimal savings now, and recasting your loan over another 30 years could cost you tens of thousands of dollars more in interest, and that might not be right for you and your family. I'd like to introduce a term reduction refinance loan. This loan type suits most homeowners that are over 4, maybe 5 years into their current mortgage. A term reduction loan is giving you the ability to reduce your rate and cut years off the life of the loan at the same time. And by doing that, that's really the first step in building wealth. So imagine having a similar payment to what you have now, but removing about 4 or 5, maybe even 6 years off the life of your loan, accounting for tens of thousands of dollars. So think about how valuable 4 or 5 years will be at that time. Being mortgage free could be a fresh start for the goals that you have for your next chapter. You're going to build equity at a much faster pace, meaning more of your money that you're spending now is going to be going towards owning your home, and not going to interest. And the question comes up, well, what if I sell? Well, if you sell, you'll profit more from the sale of your home because you'll have had a lower balance at that time. You could be mortgage free sooner, maybe even retire early, all while keeping a payment very similar to what you have now. And this works in a lot of different loan amount examples. To give you an example of someone who had a loan, let's say 5 years ago, with a balance of $250,000 at 4.5%. That payment was about $1,266 monthly. Now, when that loan began, of that $1,266 monthly payment, we had about $329 going towards principal and about $940 going towards interest. Now, fast forward 5 years down the road, that balance now, $227,000, that same payment of $1,266 has a $412 principal contribution and about $854 going towards interest. That's only an $80 a month additional gain in equity after making payments for 5 full years. While with the term reduction loan going to a 20-year term in this example, new payments about $1,360, $94 increase in payment. However, of that payment that you're making, $412 was going towards principal. Now, $628 a month is going towards building equity. That's taking 5 years off the life of your loan and over $75,000 off of that loan repayment. So just like there's the right home for everyone, there's also the right loan for everyone. And consumers have different goals, whether it's to save now or save later. There's no wrong answer. It's going to suit your individual needs. But if you own a home and you're interested in having a higher monthly cash flow from a lower rate or paying off your mortgage early from building equity, I would encourage you to reach out to a mortgage professional or contact us, and we'll review how the low rate environment today can benefit you and your family. Thank you.